Are you starting your financial journey and wondering how to build your credit score from scratch? Whether you're new to credit or looking to improve your financial health, this video is for you. Today, we'll cover everything you need to know about building a credit score from the ground up. Let's dive in. First things first, what is a credit score? A credit score is a numerical representation of your creditworthiness. It ranges from 300 to 850 and is used by lenders to determine how risky it is to lend you money. Your credit score can impact your ability to get loans, credit cards, and even affect your interest rates. So, building a good credit score is crucial for your financial future. Now let's break down the steps to build your credit score from scratch. Step 1. Understand the basics of credit. Step 1 is understanding the basics of credit. Credit is essentially borrowed money that you promise to pay back later. It comes in various forms, including credit cards, loans, and lines of credit. Your credit score is a numerical representation of your creditworthiness, calculated based on your credit history. This history includes several key factors: your payment history, amounts owed, length of credit history, new credit, and types of credit used. Payment history accounts for 35% of your score, reflecting how reliably you've made payments on your accounts. Amounts owed, which make up 30% of your score, refers to your credit utilization ratio, how much of your available credit you're using. The length of credit history, contributing 15%, considers how long you've had credit accounts and how long they've been active. New credit, at 10%, examines recent credit inquiries and accounts, while the types of credit used, also 10%, looks at the variety of credit accounts you manage, such as credit cards, mortgages, and installment loans. Understanding these components will help you make informed decisions and take the right steps to build and maintain a healthy credit profile. By managing these factors effectively, you can improve your credit score and enhance your financial stability. Step 2. Open a bank account. Step 2 is opening a bank account. While having a checking and savings account may not directly impact your credit score, it is a crucial foundation for managing your finances. A bank account demonstrates financial stability and responsibility, which can indirectly influence your creditworthiness and help establish a positive financial profile. Start by choosing a reputable bank or credit union. Compare account features such as fees, interest rates, and online banking options to find the best fit for your needs. Consider opening both a checking and a savings account to better manage your day-to-day expenses and savings goals. Once your accounts are open, be diligent about managing them responsibly. This means keeping track of your balances, avoiding overdrafts, and setting up automatic transfers to your savings account. Good management of your bank accounts will not only help you build a solid financial foundation, but can also pave the way for better credit opportunities in the future. Step 3. Get a secured credit card. Step 3 is getting a secured credit card. A secured credit card is an excellent option for building credit when you're starting from scratch. Unlike traditional credit cards, a secured card requires a security deposit that acts as your credit limit. This deposit minimizes the risk for the lender and provides you with a way to start building your credit history. To make the most of a secured credit card, start by making small, manageable purchases. Aim to use the card for everyday expenses you can easily afford and always pay off your balance in full each month. By doing so, you'll demonstrate to lenders that you can manage credit responsibly and avoid accruing interest or carrying debt. Consistently using and managing a secured credit card well will help you establish a positive credit history. Over time, this can improve your credit score and make it easier to qualify for unsecured credit cards and other financial products. Step 4. Become an authorized user. Step 4 is becoming an authorized user on someone else's credit card. If you have a family member or friend with a strong credit history, you might ask if they would add you as an authorized user on their credit card account. This arrangement allows you to benefit from their established credit history and helps you build your own credit profile. It's important to ensure that the primary account holder has a good credit history and consistently pays their bills on time. Their positive credit behavior will reflect on your credit report, potentially improving your credit score. As an authorized user, you typically receive a card in your name and can make purchases, but you aren't legally responsible for the debt. However, your credit report will show the account's positive history, which can enhance your credit standing if the account is managed well. Make sure to communicate with the primary account holder about the use of the card and any expectations they may have. By leveraging their good credit, you can make significant strides in building your own credit history. Step 5 is paying your bills on time. This includes not only your credit card bills, but also utilities, rent, and any other recurring payments. Timely payments are crucial as they make up the largest portion of your credit score. Consider setting up automatic payments to ensure you never miss a due date. Consistent on-time payments will build a solid credit history. Step 6. Monitor your credit report. Step 6 is monitoring your credit report regularly. You're entitled to a free credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, once a year through annualcreditreport.com. Review your credit report for any errors or discrepancies. If you find any, dispute them immediately to ensure your credit report accurately reflects your financial history. Step 7. Avoid unnecessary credit inquiries. Step 7 is to avoid unnecessary credit inquiries. Each time you apply for credit, a hard inquiry is made on your credit report, which can slightly lower your score. Be selective about applying for new credit to avoid multiple hard inquiries. Only apply for credit when necessary and choose products that suit your financial needs and goals. Step 8. Keep credit utilization low. 8 is to keep your credit utilization low. Credit utilization is the ratio of your credit card balances to your credit limits. Aim to keep your utilization below 30%, as high utilization can negatively impact your score. For example, if you have a credit limit of $1,000, try to keep your balance below $300. Paying down your balances and keeping utilization low demonstrates responsible credit management. Step 9. Diversify your credit mix. Step 9 is to diversify your credit mix. Having a variety of credit types, such as credit cards, auto loans, and mortgages, can positively impact your credit score. However, only take on new credit if it makes sense for your financial situation. A diverse credit portfolio shows lenders that you can manage different types of credit responsibly. Step 10. Be patient and consistent. Step 10 is to be patient and consistent. Building a good credit score takes time and dedication. Consistently following these steps will help you establish a strong credit history over time. Remember, there's no quick fix for building credit. Patience and consistency are key to achieving a healthy credit score. Building a credit score from scratch may seem daunting, but with these steps, you'll be on your way to establishing a solid credit foundation. If you found this video helpful, give it a thumbs up, subscribe for more financial tips, and leave a comment with any questions or topics you'd like us to cover next. Thanks for watching, and happy credit building.